Europe is not doing well. Speaking of recessions, many of the major countries in Europe are in double-dip recession. What's going to happen to our economy? What happens if Greece says goodbye? What happens if if the European recession starts to spread?
Well, I think it's a foregone conclusion that Europe is in recession already. It's going to get worse. Their fiscal problem is even more deep-rooted and unmanageable than ours. These massive welfare states are sitting atop aging populations. They're heavily taxed already. There is no political will to really bite any bullets, and that's why we have this crisis month after month after month, and it spreads from one country to another. So that is going to hit the world economy. I think the European banks are in very bad shape. Most of these are giant, insolvent piggy banks that are stuffed full of government debt. So that will spill over, affect the world economy, affect the U.S. economy, affect our financial markets. I think China is in the middle of a fairly hard landing, and as a result of that, the whole sort of reflation trade and resource boom and so forth that's been underway is going to begin to unwind rapidly. We're going to face our fiscal triple witching in December when everything expires and the debt ceiling is used up. So the whole world economy is on a path towards some major collisions, dislocations towards the end of this year.
What does that mean to the viewer watching at home right now?
I think it means that you need to be extremely conservative and cautious. Don't go out and spend on things you don't need. Try to protect your assets. Get out of the stock market. It's a dangerous casino that's going to blow up every day. There is no reason to own government debt of any long duration.
Where do you go to hard assets?
I think you just have to keep your investments in cash or near cash. That is, the issue today is preservation of capital. It is not earning a return.
Yeah.
Any attempt to earn a return puts an investor in harm's way. The Fed has totally rigged these financial markets. Everything is on a razor's edge as far as I'm concerned. And one of these days, the whole thing will go through into another swoon like we had in September of 2008.
Well, I saw some research the other day by a group. I mean, everybody can do their own research. That said 2008 was just a warm-up.
I agree, because we didn't address any of the problems that were implicit in the unwinding and the meltdown occurred at that time. We say that the private sector is deleveraged. Not very much. The household sector debt was 99% of GDP, an all-time high in 2008. Now it's about 93. The historic norm was 40. Okay, so that's how far we got off track over the last 25 years. If we look at the business sector, they've actually increased their debt substantially. The business sector has $11 trillion worth of debt and $2.5 trillion worth of cash. And the Wall Street guys want you to look at the $2.5 worth of cash, trillion, and ignore the massive debt that's tottering out there. And for the moment, it's under control because they've got the interest rates close to zero.
Right.
But the minute the economy goes into another downturn, we're going to have huge business debt issues, default, and delinquency issues as well.
I think a lot of people know you from the Reagan administration, but after that, you were a senior partner with Blackstone, probably the largest, one of the most successful private equity firms in the country. So I've been curious about, first of all, I'll get your comments about the politics of it, but a lot of the private equity firms were investing in companies prior to 2008 at very, very, very high prices. And I've been wondering, why have the private equity firms not had problems?
Well, mainly they haven't had problems because they've been able to kick the can down the road. In other words, they haven't really paid down much debt. They've simply extended, pretend and extend.
Renegotiate
deals. There's been a lot of refinancing. And because the Fed has actually, I think, so distorted the interest market that they've been able to raise massive amounts of junk bonds to take out their bank debt and extend the maturities down the road. but I don't think that's doing a favor to anybody. Okay, we actually, private equity is a fair way to invest capital. But private equity basically is massive leverage that's encouraged by the Fed with low interest rates and by the tax code that makes it deductible.
Sure.
So therefore, we actually have way too much leverage, way too many LBOs, way too big of LBOs in the business sector today, not because they're inherently bad on the free market, but when you have policy that's heavily biased towards, over leverage and massive borrowing at very low apparent costs, that's what happens. Now, I don't think this is going to have a good ending. These businesses, when they get that much leverage on them, I've had experience, I know, pretty soon they throw everything over the side that can be thrown over the side: jobs, marketing, investment for the future, maintenance, and so forth, in order to keep paying the interest until you run out of steam. So it is not a healthy situation at all in the business sector today.
What do you make of the comments, especially when it comes to Mitt Romney, about the fact that private equity, and the president talks about private equity? Well, he actually says it's good, except for when there's a Mitt Romney involved. Right. The perception of there's a class warfare going on about you private equity guys. Bad.
Well, I think it's really the wrong debate. The debate is, how is the government going to get its fiscal house in order? We're electing a president to figure out what to do about revenues that are way too low and spending that's massively too high, what to do about a Defense Department that's far bigger than we need in the new world that we're entering. Those are the issues that public policy issues the president ought to deal with. Neither candidate is honest when they're saying they can create jobs better than the other one, okay? Because the government can't create jobs. The government needs to mind its own business, manage its own finances, get out of the way, and allow the private sector to slowly rebuild and heal itself. And therefore, the stimulus model of Obama has failed totally. It's just buried us in debt. But frankly, the LBO model of Romney isn't going to solve the problem either, because LBOs are a way of extracting cash from companies. They're not a way of creating jobs.
Well, we could do this for a long time, but that's all the time today. But David Stockman, you're always fabulous to talk to. Thanks for your